The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. We're going to start out with the German DAX today. As you can see, it's making some type of a three-drive pattern up in here on the hourly chart, which looks very interesting, folks. But the next one is the one that is really interesting. You don't see a pattern like this very often. It's almost like there's something getting ready to happen. Take a look at this FTSE chart, which is the London stock market. Now, it's not as big as the DAX, of course, but it is heavily traded and, you know, certainly important. But look at this. We've been here. It's just almost amazing. We've been here for so long. We've been here about 10 days in this range here. I mean, you just can't find this. So this really means something. Ordinarily, it means a, you know, high-level consolidation, but it also could mean, you know, high-level congestion too. So wherever it breaks out of this range is probably where it's going to go. But we'll be following it here, of course. But this is very, very unusual to see this happen. Anyway, we'll keep a close eye on it as we walk through. Now, I wanted to go down memory lane here just a little bit because there's so much stuff in the news about what's going on with Syria and everything else. So let's just go back to where we were in 1991 when we were, it was 1990, it was January 1991. We had the Desert Storm War. Now, I've marked that over there, as you can see. This is a monthly chart. But as you notice, we were trading at $41 a barrel as we came into that new moon, and we were at the 1.27. I don't have the daily charts here, but I can assure you that we were making a three-drive to a top pattern on that daily chart as we were making the long-term, you know, on the monthly. What happened was the war only lasted less than 24 hours. If you remember, if you were watching CNN, they had the war, you know, play-by-play, and you could see them lighting up Baghdad at 4 o'clock in the afternoon, California time, which was midnight, just past midnight in Baghdad, and that was it. You know, the Navy SEALs had come in, put in the laser targets, and they pretty much, you know, took care of everything in just a matter of a few hours. So the war was discounted. What was amazing about this was, remember, we didn't have overnight markets at that time. But I had access to New York, and I also had access to London, and I could not get a quote on anything. I couldn't get a quote on gold. I couldn't get a quote on crude oil. The reason was the lines were busy. And, you know, that was very, very unusual. It took me well over 4 hours. It wasn't until 9 o'clock at night that I finally started getting a quote from what was going on. And my broker, I said, you know, what's the problem? He said, well, I've been on the phone with just 2 clients, you know, all this time. And I said, wow. I said, what's going on? He says, well, I said, I'll tell you what I know. And I said, well, give me gold first. And he said, well, gold's down about $20. And I said, and gold had made a beautiful butterfly top, and it was down, which I was expecting. We didn't have overnight trading in stocks, so you know, nothing new was there. We were making a Gartley pattern, you know, on the buy side of stocks. But the one that interested me the most was crude oil, because I had this really nice three-drive pattern, and I had sold crude. And I said, give me a quote on crude. He said, there are no quotes on crude. And I said, come on. I said, give me a quote on crude. He said, Larry, he said, there's no bids. And I said, what do you mean no bids? He says, there's no bids. He said, we don't even have any bids $6 lower. I said, well, there's something wrong with the data machine. He said, well, that's what I think too. Well, there was nothing wrong with the data machine. Crude oil opened $11 a barrel lower that day. That was $11,000 a contract. And if you'll notice here that it went all the way down from $41 a barrel to just above $11 a barrel in January of 1999, 8 years later. So that, remember, when you see these things, the news follows the trend. So don't always listen to, what's going on. We're seeing similar things happening now. We had some bombing over the weekend, and everybody thought it was going to be negative, and here you come in, and the market is very strong. So you have to, follow the money, because that's what's really going on. Another thing about this crude oil contract that is really interesting, if you'll look back into 2008, when Goldman Sachs was predicting $200 a barrel, and of course, what they were doing at that particular time, they were going short heavily. That they were kind enough to tell us about that when it was down about $80 a barrel, on its way to $35 a barrel. Anyway, what I want to try to get across to you here is that what you hear in the news and what you see on the charts can be 100% different. My premise is to follow the charts, because they cannot hide from you here. They can give you bad information. They can lie to you, of course. They can do just about anything, but they can't hide from you. So if they're buying, prices are going to go up. And if they're selling, prices are going down. And one of the strongest technical signals that you can get is if the market reacts really badly to good news, that's extremely negative. And if it reacts really bullish to negative news, that on the other side of it is just telling you that it's probably over. So that's how I became a technician. It took me a long time to get to that level, but I used to read all the fundamental reports and all that stuff. But the one thing that'll help you is if you follow what those prices are doing, because as Bernstein and Woodward said during the Watergate, follow the money. So that's pretty much, what we're looking at here. So keep in mind that the bar charts won't lead you down the primrose path, because they can't hide from you. That tells you where the buying and selling actually is. And as we know, money is power, and that's the thing that you want to focus on as you're looking at some of these. But, just remember, I'm just a technician, so it's not it's not written in stone, but I can tell you from experience that it's been a pretty good indicator of what's going on, with some of these things. Now, I've had a request to take a look at Twitter here. Let's get this up here, because we brought this up when we had Al Larson on just a few weeks ago, when the stock was down around the 27 level. I think it was 26, right around 26, 27 level, and he thought that a bottom had come in here. But the main thing on the Twitter, as you can see, over the past year and a half, we've had these really strong moves where the market has rallied about $12 a share. And when you got a $28 stock, it's a huge move. But you see 3 of these here, and now we're down into this gap area. And so it has really strong support at this $26 per barrel level. I got crude oil on my mind. Anyway, it's $26 per share, of course. But this is what we're looking at. The important thing about the Twitter chart here are 2 things. One is, at that level, it's going down and matching the high from 2017 and also the high of 2018 right into the gap. We're going to take a break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I believe we have a caller from Philadelphia. John, are you there?
I am, Larry. Good morning to you after this very calm, lackluster weekend.
Yeah, it was, rather speaking, I guess, considering all the news that came out. What can I do for you, my friend?
I wanted to ask you, please, about three things, gold, silver, and wheat. And I wanted to ask if you could help me start off on the silver. Full disclosure, I bought the May silver last Thursday, and I think my entry price is $16.50 or $45, somewhere in there. It pulled back off the Wednesday high into a Thursday low. It tested, held, and rejected the short-term Fib 618 support mark precisely. And now we're turned up a little bit. My question, as you look at your 4-hour and daily charts, can you envision the pattern evolving into a rally phase that gets over the $16.90 to $17 area, please?
John, I certainly can. The fact that it's stayed here for so long is really quite good. The only thing that troubles me is, I've been very, very bullish on gold. I'm flat right now after, getting out of it on that rally because of the ABCD pattern that we had last Thursday. But the key here is that it's lagging gold so badly. We haven't seen this happen in a long time. I mean, gold went up and made a, quadruple top when silver couldn't even make they made a perfect 50% ABCD correction up there at 16.92. The key, John, is if we get above $17 an ounce, that's going to be very, very important. But the key is the gold. It seems to be it doesn't want to go down very much. I mean, even though it made a big ABCD pattern there, we were only able to drop $34 from the high, and of course we know that that's the harmonic number in gold. In fact, let me do this for our listeners just to show you the importance of this, because it's really quite interesting. I featured this in the newsletter this week because It was quite interesting, but you'll notice since February we've had 4 $34 per ounce drops. Actually 5, considering the one in early February, and then also we had one of $68 per ounce, which is twice 34. And so as long as we can stay above 1330 in the gold, there's nothing wrong with it. But John, if it ever gets above 1375, that's $30 from where we are now. This has got $150 more, tattooed across its forehead, because 1470 to 1520 would be the next ABCD leg in this. But it looks very, very strong compared to silver. My goodness, it's if you just looked at gold and didn't look at silver, you can't be bearish. But when you look at silver, it sort of tempers your bullishness on gold, and maybe that's the trap, my friend. Maybe that's the trap.
Well, I'm going to be a parrot right here, and parrot something I've heard you say many times over the years, and I'm just going to say it to you directly. Because it applies right here, right now. When you're trading gold, trade gold. Don't trade gold because some other market is doing something. I've heard you say that correct. Very often, my friend. I think that applies right now.
Yeah, absolutely. Yeah, do what I say, not what I do. That's pretty much to say. That's very, very good. Now, you wanted to... Go ahead.
I will tell you, I must thank you for having Norm Winsky on from time to time. And last week, I think it was Thursday, had him on where he was highlighting the importance of a time window, just having a very unusual cluster of astrocycles hitting in a window of time that we are still in. My question is the wheat market preparing to turn as you see it in this astrocycle time cluster?
Well, John, I'll post the chart of Christmas wheat, December wheat here for the folks to take a look at it, because we have a new moon yesterday, so we are coming down to a 61% retracement down here at the 522 level. I believe we're trading at 524 pre-market, so there should be some pretty strong support around that 522 level. That was also one of the highs that we made in February, and the risk there, I think, would be relatively small, but we've had higher bottoms here. The high we made last week was a perfect 78% level, so it still has a slightly bearish connotation to it, but it looks bullish longer term, and as you know, I'm very bullish, corn and beans long term, and this looks like a real interesting astro trade here in wheat if we can get it down to 522. You certainly don't have to risk very much. You can be a farmer there for about a 5-cent risk. So you'd want to put your stop down around the 517 level, just in case you're wrong. And, we're wrong a lot, so make sure you use a stop. But it's got a pretty good chance here. And we're 5 days down now, which is also, one of the things that I like to see. I've marked that chart on there showing you those 5-day retracements. And they happen quite often. And this one happens to be coming right at the new moon. So that should mean something.
Very good. I thank you. And I'm going to part and sign off. Thank you for your help going into the end of this segment, Larry. But let me share this before I do depart. I am just posting in the Tiger's Den for you and the audience there the monthly charts of the gold-silver ratio, or stated differently, the price of gold per ounce of silver. Mm-hmm. So I've just posted it, and what I'm observing, Larry, on the monthly chart, of course, silver's weak relative to gold, as you observe. The question for me is, okay, fine, yes, silver's low versus gold. Question, does it have a chance of turning relative to gold? And as I look at this 21-year monthly chart, I see that the gold-silver ratio hit a peak at 82 this month, and this is a high that's been reached now 5 times in the past 21 years, and each time it hit this, it topped and it turned down, meaning silver rallied vis-a-vis gold. And as I pull up the daily chart, Larry, I'm seeing what looks to be, on the daily chart, a 3-drive to a top pattern into this 82 GSR top. So there you are.
That's really great information, John. I hope the folks take a look at this chart because it goes back 20-plus years, and it shows this massive top up in here. But that is a very good description of what could be happening in silver right now. So if it goes, boy, it could really surprise a lot of people. So we'll keep an eye on that, and let us know if it breaks out to the upside, because that would really be some interesting information also.
Thanks for your help, Larry.
Hey, thank you, John. We really appreciate it. That's Mr. Z from the Tiger Den, who gives us some great information. And, of course, he was famous for his cocoa call back in January at $18.45, and cocoa went to $26 very, very quickly. So we love having him in, and all the other folks in the den. It's just really a great family to be at TFNN because they give us such great information. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart here from Holbert Financial. I've followed this outfit for many, many years, and they've shown a chart here of the probability that the market will rise in any calendar year, and it's showing that whenever the market was up the previous year by 20%, the odds are better than 78% that it's going to be up the next year, and usually in the neighborhood of about 8 or 9%. So that's a very positive thing. There's one negative to this statistic, and that is the number of samples that you had where the market was up 20% in a year is rather limited. Over since 1896, it's happened, but not that many times. So this is a positive expectation, and I just wanted to bring that to your attention because it is related to that, and I think it's very, very important. We're now entering the opening of the market. We've got the Dow up 200 points, the S&P's up 18. The Nasdaq's up quite a bit too. What is it, up about 80 or something? And so these markets are moving. Remember, we're into the what we call the amateur hour. So that's that first 45 minutes of trading. If you'll notice, that's what happened on Friday. We had a really strong open, and what happened? It rolled over. So we'll wait and see. Now we've had a question here in the den about our good friend Norm Winsky. He has a very strong cycle bottom due, a turning point today in sugar. Now we don't track sugar very often, but I just wanted to bring this to your attention here so that you can see it, and then you'll be able to see where we are, because this is one that is mother, God, and country, because it's down at the it's hanging on the edge of the cliff, as they say. And what's good about this is, if you notice that the sugar down around this 12 cents 12 cents per pound is right at the 1.618 expansion, and it's been here for 4 days. So it's actually, I think it's unchanged so far this morning. So we'll be able to see. Okay, hold one second. The chart says the market. Yeah, it mostly goes up. That's correct. Anyway, if you watch the sugar very closely, now the best way to handle the sugar here comes from an old colleague and friend of ours that we've heard about before, and that is Amos Hofstetter. Amos, used to love, weekly breakouts. So the way that he would handle this is, if sugar takes out this past week's high, which would be up around 1280 in the sugar, he would go long and then put his stop below that. This was also a strategy employed by William Dennis from the Turtle Group, if you remember, and they worked on that, quite a bit. So, but what I'm looking at here is just multiple patterns that come in here at the 1.618 level, and that's really what I'm watching here in the sugar. I'm personally not trading this. I just bring this to your attention because we were chatting about it here in the den, and it does follow along with the things on risk control that we like to look at, because the risk here is extremely small, and whether it works or not, I don't know, but it's all probability based, and that's another one that we want to look at very, very closely. So keep in mind, that's what we're watching. Now, as we came into this week, we had a very interesting situation happening in the Dow Jones. Let's bring this up here because this was something that I focused in the newsletter because of the fact that we had all these rockets going off in Damascus, and I tried to bring, in fact, as I did in the newsletter, relay what happened in 1991, the fact that even though those rockets were going off, the market, reacted very, very positive to it. Now here in the Dow Jones, you see that we've been in this downtrend, since the 29th of January, when we had a new moon, believe it or not, and we did. You'll notice that yesterday's, the high that we had Friday was a perfect 61% retracement. We took out the previous week's high by I think about 30 points, which is nothing when the Dow's trading at 24,500. And I mentioned that the only thing that would keep this from being bearish is that if we exploded to the upside this morning, and that's exactly what started last night. We opened 110 points higher Sunday night, and we've continued to go higher. So if we close above this 24,600 level, this is going to be actually a pretty positive chart. And part of the reason for it is, if you remember last Monday, we were looking at that beautiful 135 pattern. That was a pattern from Roy Longstreet and his son Bill. Each of those ratios between 1 and 3 are perfect. 78% ratios, just absolutely spot on. It might be interesting if you would go down to an hourly chart and just prove it to yourself, because you'd see that these patterns do have similarities where they repeat, and then they also are predictable within limits. And the reason for that is that they do follow these ratios that give us a pretty good idea of where support and resistance should come in. So today is going to be extremely important, especially this first hour of trading, because we're going to be back up to these old highs again, and that's going to be the key, whether we go blasting through it. And remember, we were just talking to Mr. Z from Philadelphia about Norm Winsky, and Norm has this whole 3-day area here between the 16th, 17th, and 18th of some really strong cycles. Some of them are related to the retrograde motion of the planets, which we've talked about before. So that's something that would be very, very interesting. In addition, we've had Bill Meridian on last month, and he also brought to our attention the importance of this third week of April. So watch it very, very closely. That's going to be a key figure, to watch as we look at these markets each morning when we're watching. Let's see how we're doing today. We're still Dow's still up almost 200 points. But watch this first 45 minutes of trading, because that's usually amateur hour. And that means that everybody puts their orders in right on the opening, and that's usually not the best way to do it. One of the things that I do on Sunday night is I watch Bloomberg to see how the Asian markets are opening, because of the 12-hour time difference between New York and Hong Kong. But the main thing to look at is the fact that, the Dow's only up 127 right now. I see that, but they're posting it as 197 on the board, so there's a big difference there. Now, the one thing that you want to keep in mind is that when you watch Asia and you look at those charts last night in Asia, the market opened higher on every single one. It didn't make any difference whether it was Shanghai, China, Hong Kong, Korea. They all opened right on the high, and they all sold off all night long. I mean, that was it was really amazing to see how the opening price worked, on that particular sector overnight, because it was very, very interesting to see how that transpired, and that's going to be hard for them to reverse that. So watch this opening, because it's a lot of times that you run into these areas where they rally up and they don't go anywhere after the opening, valley of the orders coming in. So pay attention. Remember, this news of this stuff that's going on in both politics and in the war stuff, if there is a war, is all already focused into the market. So we've already seen this in the thing about the tariffs and trade war. Okay, we'll be right back. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a look now at the crude oil contract. We've had a couple of requests for that. It's very interesting here. If you look at crude oil here on a chart that goes back, this is a daily chart, going back several months, so you can see the pattern that is forming here. If you look at February, the low was made around the 9th. We rallied up 12 days into a high, just a little above the 61% retracement. On March the 9th, we rallied 13 days right into a high. And if we continue following this pattern, you'll notice that on the 25th of April, 9 days from today, we could be up around this $69 per barrel level. That would be a perfect ABCD pattern. It would also be a 3 drive to a top pattern, and it would also be a 50% retracement. I think it's 69.90 on the long-term weekly chart of crude oil. So that's what we're watching. Last night we sold off $1.80 a barrel. And we know that, $1.60 a barrel, and we know that the harmonic number in crude oil is 80 pips, and so 2 times 80 is 160. And since that time, we've bounced a little bit, but still very, very little. So we're keeping an eye on this, but it looks to me like we've got a really good chance to see the crude oil get out to that area of $68.85 to $69 a barrel here very, very shortly. We're just having short-term corrections here due to the flavor of the news that comes out as we go through. So we'll see what's going on, and then we will look at that very, very closely. Now, I would like to mention just a little bit about the longer-term view of the interest rate market. I wanted to bring up this bearish Gartley that we had in the crude oil about 8 days ago. This is not too swift, Larry. The crude oil that let's have a timeout. Judge's ruling. Let's take a look at the Dow Jones Utilities, where we had a beautiful Gartley pattern at the 382 retracement. It was a perfect ABCD. We've sold off now 8 days, which tells us that interest rates should be going higher. In fact, that's what we are seeing. This is one of the things, I've said many times, the most bearish of all the charts that we look at happens to be the Treasury notes and Treasury bonds. It just looks flat out bearish, long-term, short-term. Any way you look at it, it's very, very bearish. Now, we received a real interesting chart from one of our favorite folks up there in Salt Lake City, up there on Rich Hill, 1941 Rich Hill Boulevard, and we'll take a quick look at this chart that we can see here. This basically is showing you the interest rate picture here of the 5 and 10-year yield curve and how it relates to the stock market. And you can see the S&P is in the blue, and so this means that interest rates, we're getting ready here for something really big to happen, folks, because we've had this spike in interest rates, and that usually is not good to the stock market. But because of quantitative easing, all of that could change. So you don't really know, what's going to happen. That's why I look at the charts of what I'm watching, whether it's T-bonds or Treasury notes. They look, very, very bearish. We have been saying this for, quite some time. If you remember, we were looking at that equal rally that we had in Treasury bonds about a week or so ago, up at that 147 and change level, and now we're trading below 145 this morning. Folks, take a look at that chart in the bonds, because that's a 30-year bond, and if we go below that 142 level, that sets up 129. As an ABCD structure, and it should be a very powerful ABCD structure, because we've been rallying here for several months now and have gone nowhere. I mean, we just can't even bounce at all. That's a sign of what they call a dead cat bounce. Nothing against dead cats, but that's what it is, and it doesn't look very, very bullish, which means interest rates are going to go higher. But stocks can go higher in an interest rate environment too. So look at the charts and let them know what you're really looking at. So that's the key. Another stock that we focused on over the weekend, one of the big stocks, which was Amazon. And Amazon is, basically in a major sell zone. It has to get, I don't know where it's trading this morning. I think it closed around 14.30 a share. But if Amazon gets above 14.60, then, that pattern would not be good. But it's a beautiful 135 pattern in Amazon. If you have the chance, go look at the stock and look at the pattern, because it's a relatively bearish chart in Amazon. Not counting what's going on in the news, but that's what it looks like. Could someone give me the price of Amazon for a second here, because I'm not able to pull that up when we see this. Thank you for the information on the dead cat bounce, David. That's very, very good that you can put that in there, because it's really good. See, Amazon's hardly even up at all. It's up 7 points, and it's got to get above 1460 in order to be, a failed pattern. So these markets, to me, are doing what they're supposed to be doing. So we'll see how they end up today. But it's going to be interesting to watch these interest rates increase, because they are going higher. I don't think there's any question about it. I've had another question about the gold, how I'm going to handle it. Folks, we bought the gold down there the other day at 13.31. We got out of it 13.55. And that was basically because, we made that big ABCD up there. We wanted to see how it's going to react. We came down $34. We haven't gone below that. But if we do go below it, I hate to say the word hope, but one of the things that would really be nice from a technical basis is have one more washout in the gold and silver. Silver getting down to, say, 15.20, down about $1.20 from where it is right now, and gold maybe dropping, $60 into about $12.85. Boy, that would set up a beautiful multiple ABCD patterns in all of these. But until that happens, you really can't do very much, because gold has been in this high level consolidation for a long time. And as the chart that we saw from our good friend Mr. Z in the room on the gold-silver ratio, I mean, that's 21 years. And we get that ratio above 82, something's going to pop, and it's going to be very, very interesting in these precious metals if we get there. But so far, that has not happened. So what we're trying to do is to trade the patterns as we see them, and not to have too big of an opinion, because opinions can get you into troubles. Because remember, opinions are often wrong, but markets are never wrong. So keep interesting. Yes, David, I did watch that on 60 Minutes about Allegiance planes. I was shocked, but not too much shocked because it's a government agency, that FAA, and you know what happens to bureaucracies. Once they get entrenched, you can't do very much to it. But when you think there's smoke in a plane, you think they would have a pretty good chance if you want to get on the on the ground as soon as possible, but we'll wait and see. Remember, folks, the news that they have on these things, they bring this news out to draw you in to watch their programs. So not all the stuff in the news on any of the media is always going to be 100% truthful. I don't think anybody can doubt that. So we're going to take a little break here. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to bring two things to your attention. One is that we do have a Gartley on the Treasury bonds and Treasury notes on the bullish side. In other words, there should be a strong bottom down here at this 144 and change level in the Treasury bonds. And of course, if it fails, then a failed Gartley will usually turn into a butterfly. But the chart that I've just posted into the den is the one that I wanted to talk about, and that is the NASDAQ. Let's just get this up here so you folks can see it. This is an hourly chart on the NASDAQ, and I want you to notice that the low that we made on April 4th when we made the double bottom there, we've been rallying for 10 days, folks. The high was made on the Treskai Decaphobia Friday the 13th, and we have not been able to take that out. We couldn't take it out last night, and so far we haven't taken it out today, and that has been the leader of the pack. So the leader is not doing well. So pay attention here. You know, we've got another 10 minutes or so to go in through amateur hour, and then we'll see what happens. But if we start moving lower the rest of the day, that's going to be very, very interesting to see what's going on. Mr. Z has posted that low of the Treasury in at 144.21. That is a perfect Gartley over the past 3 weeks. So that's a line in the sand on the Treasury bonds. Getting below that by more than 4 or 5 pips would tell us that rates are going to go higher. So we'll see what it's going to do short term. Long term, I have a hard time believing rates are going to go lower, but I'm just looking at the charts. Watch these prices that we're seeing today, folks, because if we close really strong in stocks today, that is going to be very, very bullish. And if we close poorly, that's bearish. So that's just looking at the charts on the probabilities of number of days up, stopping at ABCD patterns, and also at major Fibonacci numbers. That's what we focus on the newsletter at 24/7. Try to give you an idea of where we stand on some of these things. Now, we've got time in gold and silver I left. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!